Welcome to Bears in Exile. Today is June 7th. This is our market overview, and this will be the last market overview for a week. I am going on vacation and won't be back in the forum or doing videos until this coming Tuesday, so 1 week from today. We'll be looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And we'll start off with the Dow. Last night, I apologize, the video would not take at YouTube, and I tried all night to upload it, and it just would not work. And it must be something on YouTube's site, because I couldn't watch their videos. I tried uploading several videos just as a test. Used different machines. It was no go. So with any luck, this video will be up. Anyways, here's the Dow, and very interesting. Unlike the SPX, the former bottom channel line, now it's just a line by itself, continues to hold the Dow for whatever reason, and we closed with a inverse hammer, possible reversal signal, very weak one, but is there nonetheless. We have further expansion of the short-term moving averages. They do look bubbly, so any move up tomorrow, if there happens to be any, we'll expose this as being a bubble, and you may even render a uptick. I won't have a video tomorrow to tell you what the uptick target is, but if we do get one, we'll count back a day, look up, and the target would be 12,300. So there it is, at least good for a day, at least, if we do have an uptick. Beyond that, everything looks bearish still. Everything's either massively low or has a little ways to go. So looks terrible from the bullish perspective. It looks great from the bearish perspective. SPX, of course, we took out the low over here yesterday, ended up with a inverse hammer. Definitely looks bubbly. We do not have an uptick. We do not have an up target. If we were to get one tomorrow, then the target would be right over here at 1312 roundabout. And of course, this entire channel is destroyed. So secondaries, just like the Dow, very low, and that's all there is to say about that. Looks extremely bearish. And now we have the VIX, and the VIX, yet another hammer. So spinning top, super spinning top, hammer, hammer. Does that mean that movement to the upside is accelerating? Possibly. We do not have a downtick. Even if we did, it probably would be taken out intraday. But this does look wobbly and bubbly. But there isn't really a bar left to suck it back in. And the secondaries are neutral and pointed down from high, high not yet pointed down, very mixed. So this can do anything it wants to. Not much to glean from the VIX. And TNA, had the video gone up last night, we did mention that we were below the lower Bollinger Band and needed to be ejected from it. We did get that today. It is a inverse hammer, although the wick could be longer. The short-term moving averages are bubbly. However, we are getting a crossover on the long-term moving averages. It's a flat line right now going into a crossover, and everything else looks bearish. So, you know, just like the Dow, just like the S&P, this is ugly. It's gone a very long ways. Just not much to say until we get an uptick. And if we do happen to get one tomorrow, since there's not a video, the target would be just shy of 80. And UUP. Wouldn't really classify this as a spinning top. It is an indecision candle just by the way that it's formed, but the wicks would need to be longer for it to be a proper spinning top. Certainly we do have some excessive separation in the short-term moving averages, but the long-term moving averages are still expanding. They are still bearish, so the dollar does not look good. And its brother FXE, same thing. Wicks could be longer, turning it into a spinning top, so I would just call this like a mini spinning top, but I wouldn't glean too much from that. We do have excessive separation in the short-term moving averages. We do have further expansion in the long-term moving averages. Everything is pointing up or is very high already. So this does look bullish for the euro. And Bernanke had his little speech today saying that further easing is called for, which does give further strength to the euro going forward and weakness to the dollar going forward. And one could interpret that as if this keeps going up, then the markets could rally as the dollar goes down, but that remains to be seen. GLD, we on last night's video, which did not post, we commented on how weird the GLD is, and today we got a hammer, and yesterday inverted hammer, day before that hammer, day before that hammer, day before that inverted hammer, day before that spinning top. So very weird, just very, very strange. And but we still have the long-term moving averages very bullish. The bar is very strong, and we still have room to move on all of the secondaries. So if the dollar is going to go down, then gold should go up. And SLV, very, very not looking so great anyway. We had a hammer over here. It was a weak hammer, but hammer regardless, also known as hanging man, and it did go down. We have a flat line of the long-term moving averages. We have a flat line of the short-term moving averages. They can converge and overlap, but this can go strongly in either direction, and I would avoid it. This formation of a hammer today is not a welcome one, especially if it were to repeat the action of this one. You can see how hammers seem to react with SLV lately, which is hammer down, two hammers preceding that one. You have a hammer here, it went down slightly. You had a really weak, ugly little cross hammer here, and it went down. So I would be very, very cautious with SLV at the moment. Secondaries are very mixed. Lots of room to move up, lots of room to move down, lots of room to go in either direction. Double flat line, I just don't like them, and I avoid them. And that's it. I will see you guys in a week, and I hope the market is kind to you during that time. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.